Hi everybody, Jim Crimmins here. Welcome to our second webinar of the day on profit and loss statements. Glad you're here. Beautiful day in Phoenix. Before we start, we need to get some legal business out of the way, so let's do that. Take a minute and read over the disclaimer. And our contact information. My personal contact information is shown there at the bottom. Both the phone number and my email address will come right into me. So if you have questions about the presentation today or other things concerning bookkeeping, accounting, or taxes, please don't hesitate to get in touch with me. My extension didn't get on there. It's actually 313. So I have a picture. This is my family picture that I'll leave on here. Actually, it's a painting done by an artist up in Wickenburg. And I've got a few things to say prior to our starting, so I just thought I would leave that up there while I did. Why are we so interested in financial statements? What are they? Well, financial statements show past and projected finances. The statements are both the source of your tax information, but more importantly to me and to this webinar, the means by which you analyze your business. And that's what we're going to be talking about, is how to make your business more profitable by using financial statements. They're developed from your general records and fall into two main categories: actual performance and historical. The historical statements we utilize to compare current periods with. As an example, we just recently finished April, and as we roll out our profit and loss statement for April, we would want to go back to April 2014 and compare it to see how we did in comparison. And it's not just to see how we did to pat ourselves on the back or to go have a pity party. It's to look at each separate line item and see how we did. Is our marketing expense way up this year? And if so, why? Had we planned that? How about our utilities? Well, was the weather warmer this year? Each category of expense that we have needs to be compared with the previous period to ascertain whether or not we're still on the right track of becoming more profitable. If you're planning a new business, you've got no history to go back on. So at this time, we would recommend that your business plan contain a pretty good pro forma indicating in the same structure as a profit and loss, using the same categories, what you think is going to happen. Your best guesstimate on what's going to happen. Your financial statements are going to contain a balance sheet and the income statement of the profit and loss statement. We will discuss the balance sheet on our next presentation, which I believe is on the 27th. So, every business owner needs to understand, not only understand, but they need to generate a P&L statement. Information from the statement will then be utilized to perform quarterly budget analysis on a regular basis, monthly budget analysis, annual. And then if you're a new business or an old business looking for a lender or an investor, they're going to demand from you a P&L. They'll also demand a balance sheet, but we'll talk about that next time. And if you're a new business or an old business and you're not seeking a lender, you still want to use these reports as a comparison. I have a cartoon from Alice in Wonderland hanging in my office. And it has the following notation. Alice is speaking to the Cheshire Cat. Would you tell me, please, which way I ought to go from here? And the Cheshire Cat says, that depends a good deal on where you're going to go to. Alice says, I don't much care where I go. Cheshire Cat says, then it doesn't matter which way you go. Alice says, so long as I get somewhere. Cheshire Cat comes back and says, oh, you're sure to do that if only you walk long enough. And that's the same thing with a small business, folks. We have got to know where we're going. We have got to prepare a plan when we start, and at the start of every year. When we start, it's called a pro forma, start our business. And at the start of every year, we prepare a budget for that year. We shouldn't just compare to last year. We should compare to a budget. Well, what is a P&L statement? It's going to show your business financial activity over a period of time. It'll be a month, a quarter, and a year. In contrast to the balance sheet, which shows a picture of your business at a given moment, the P&L can be likened to a moving picture showing what's happened in your business over a period of time. It's an excellent tool for assessing your business. You'll be able to pick out weaknesses in your operation and plan ways to run your business more effectively, thereby increasing your profits. For example, you may find that some heavy advertising that you did in March did not effectively increase your sales. In following years, you may decide to utilize your advertising funds more effectively by using them at a time when there is increased customer spending taking place. In the same way, you might examine your P&L statement to see what months have the heaviest sales volume and plan inventory. Comparison of your P&L from several years or even several months will give you an even better picture of the trends in your business. Don't ever underestimate the value of the P&L. My next picture is from Pine Top, just this last weekend. And it looks so beautiful. Looks like you just lay out there and get a suntan. Let me tell you how cold it was last weekend in Pine Top. You wouldn't want to have laid out there. But it is a beautiful picture that my nephew took. The profit and loss statement is compiled from actual business transactions that you're keeping track of in QuickBooks, or your bookkeeping company or your bookkeeper is keeping track. So they're actual statements, and the layout of the P&L is very important. But first, the functions of financial management. You can read what I have written there. When you grow your business large enough, you can afford to hire a chief financial officer to do all of the tasks that I mentioned here for you. In the meantime, these functions fall into your lap, and it's important that as small business people, we recognize that these are our responsibilities. The failure rate of a new business is high. Most of us would like to think that if we have a good business model, boundless enthusiasm, and we work tirelessly, we're going to be sure to succeed. However, the evidence speaks otherwise. Many embryonic businesses hit financial roadblocks strictly because the owner does not understand how to manage the financial affairs of his or her business. So remembering and looking at all of these, this is the responsibility of the owner of a small business. Now, the profit and loss statement is laid out according to accounting conventions. We have to have some set way so that your banker will know how to read your P&L. If you just go about it by making it out the way you want to, whoever else is going to read it outside of your company may not be able to do so. If you use QuickBooks, it's got a P&L all set up for you through a chart of accounts. But the P&L will start with the sales revenue at the top. And you may have more than one category of sales revenue. For example, let's say you sell retail products, but you also do consulting and you do some other service work. Well, in order to verify and an ongoing method of which of these categories of your business is important to you, you want to separate them. And you would have 3 categories of sales. Following that comes the cost to you of making these sales, the cost of goods sold, or COGS. And again, these will be broken into the same number of categories you have for your revenue. And then you subtract this from the amount of revenue to give you your gross profit. Now, it can be a negative gross profit, or a gross loss, or a positive. The next thing on your P&L is going to be all of your other type of expenses, such as your rent, your automobile expenses, your utilities, your telephone, things of that nature. Now, while we're putting this together, though, we must agree on one overriding convention. As a small business manager or owner, you must have a solid understanding of your financial statements. You can't manage the financial affairs of your business without having a good grip on these financial statements. There's no way around this, absolutely none. Using a CPA to explain them to you each month can be done, but it's sure going to be expensive. We have found, and one reason we set up small business financials the way we did, is that we found most CPAs, not all of them, but most of them, would prefer just to hear from you at the end of the year. And if you've got a question, they're going to start the clock on you. That's how we define small business financials differently. We have one set fee, and we insist that we talk with the business owner at least quarterly and preferably monthly to go over the financial statements. Financial statements are prepared according to established conventions. It would be very confusing, as I said before, if each business made up its own practices for presenting its financial statements. The number of expenses that are shown on a P&L vary from business to business. Now, my overriding thought when setting up your P&L is to keep it as simple as possible, but still give you the financial information that you need to operate your business. Let's go back to my example of a business with 3 different types of revenue. We've got our service revenue, our consulting revenue, and our retail revenue. Well, how do we know whether we should continue with all three of those. Should we continue to support all three of them, or if we got rid of one of them, could we then take the time and energy that we had used on it and apply it to the other two to make them more profitable? Well, this is something our P&L is going to tell us. If we've got $100 in retail sales, but our cost of goods sold for those is $98, and then when we add the other expenses up, it's going to go way negative, and this is a continuing problem, we may very well want to say, okay, let's get rid of our inventory and concentrate on our service and our consulting. This is how your P&L can really be of help to you, but you have to have it, and you have to have it set up correctly in order to find these problem areas so that you can actually do some maintenance and make your business more profitable. That's all of us want as small business folks, is to make our business more profitable year after year. Because you've got to know whether you're making a profit or not, or experiencing a loss. An important thing to remember is that you've got to prepare your P&L on a timely basis. I always like to have ours out no later than the 15th of the month. I'd love to get it by the 10th of the month. Because if there's a problem, I don't want to waste too many days before I start looking at that problem and trying to fix it. As an example, if you're starting to lose money, but you don't realize it yet because you don't have a P&L to look at, but your cash flow still looks okay, you could have a serious roadblock ahead of you. You've got to always remember that profit and loss statements and cash flow statements are two distinctively different things. You cannot manage your business from a cash flow standpoint, although it is a tool to manage your business, and we will have a webinar on it later on in this series. But your cash flow, well, let me just give you an example. Last week I talked to a prospective client. I said, do you have a P&L? He said, I've never done a P&L. Well, how do you manage your business? He said, I've got one philosophy. If I can write a check and it doesn't bounce, then I know I'm doing okay. Well, you know, I'm sure he told that story before, and I guess he believed it. But the purpose of the P&L is not to tell you whether you're going to bounce a check today. The purpose of the P&L is to warn you that, hey, if you don't do something, next month you're not going to have enough money. So we better fix something this month so we have enough money to cash our checks next month. Your sales revenue enters from your sales journal, and if you're using QuickBooks or one of the other accounting programs, Xero or one of the other ones, it's going to be seamless. It'll come right from the sales journal, from your entry there, and flow into your P&L. This also is true with all of your expenses. Now, depending on how you pay for your expenses, if you run accounts payable, that's where your figure will come from. But if you pay everything from cash, then it'll come from your cash journal. So that's where all of these notations come from that are in the P&L from other journals that you have that reflect the daily activity of your company. Remember garbage in and garbage out. But let me tell you something, folks. When you were going to school, they probably told you in an accounting class that you had to balance everything out to the net item every month. Well, that may be true in a college class, But my sense is if you're 4 cents off at the end of the month and you want to waste 5 hours trying to find that 4 cents, that's not a very productive manner. So, your accounting records may have small errors. Most small businesses starting out will either have themselves or their spouse do the books. Now, when you set yourself up to do the books yourself, and if you're running the business, my experience has been that some nights you're just too darn tired to make the proper bookkeeping entries that you should make. And then it gets worse, because once you're tired 2 or 3 nights and don't get those entries made, you start to get so far behind that eventually you might just give up on it. Now, the other side of that is you have a spouse that has some extra time, and they agree to do the books. That's what I did. I met my wife when we both went to school at Northern Arizona University. I was an accounting and economics major. I can't remember what my wife was majoring in at the time we met, but we both worked in a retail store there to help pay for our education. And one day she came to me, we were probably in the break room, and she said, "I'm having a heck of a time with an accounting class." Well, it was Accounting 101. And I said, "Well, you know, I could be hired to help you. I could be your tutor." And she said, "Well, how much are you going to charge me?" And I said, "Well, you know, I'm a terrible ironer. I am a terrible ironer." And so we made a deal where she did my ironing and I helped her with her accounting. Now, I've got to break away from that story for a little while. I lived up in the Seattle area for 30-some years, and I loved sailing. And up there in the Puget Sound, you can sail all over the place. The water's pretty cold. You don't want to fall overboard. But my one problem is that I couldn't navigate. I could read a map okay, but I couldn't see angles. I've never been able to see angles. So when you're looking at an island and you're trying to equate it with a drawing on a map and you can't see angles, you've got real problems. I'd always have to take somebody sailing with me that could see angles. Well, my wife, getting back to the first story, couldn't see accounting. There was no way that she could understand anything about accounting, so it was just frustrating trying to teach her to get through Accounting 101. Well, now to show you how stupid I really am, and then you got to start wondering why you're here today listening to me. I asked her to do the bookkeeping for one of my companies when I first started it. Now, she did her best, and she got things done on a daily basis, which was more than I could do because I was tired when I got home at night. But anyway, for most of us, if we can afford it, we want to hire a bookkeeping service right out of the bat. But you want to vet the bookkeeping service. There's a lot of people that have decided it's a great way to make a living by saying they're a bookkeeper and they work out of their homes. They've got a little QuickBooks knowledge and that's about it. So vet these people before you select them and hire them. Make sure that they have the experience that you need. But more importantly, make sure that you get a proactive bookkeeping service. And by that I mean not one that is waiting for you to ask the questions before they give you any answers. Because if you don't know what the hell the question is, how are you going to ask it? You want to get a bookkeeping service that's going to be asking you questions. Why is this way? Why did you do this? What happened here? And not at the end of the year, but during each month. For a small business, a bookkeeping service is generally a lot less money and really a lot less problems than hiring a bookkeeper to do it in-house. If you're doing your own bookkeeping and you like doing it, that's great. But just remember, you started the business because you're good at something. Unless it was a bookkeeping business that you started, you're probably going to bring more profit to the table taking your time to do the things that you know and that you love, as opposed to making QuickBook entries every day. And then again, if you hire someone, are they really going to fit in? Number one, you can't tell from an interview, you know that. Number two, how long are they going to be with you? Now you've got to adhere to all the federal and state requirements for having an employee and paying employment tax. So many times a small business bookkeeping service is the best way for you to go. Proper accounting procedures are really going to help you maximize your profit as a business owner. It'll help you to see trends. It'll save you a lot of money and heartache. Many owners have found that their trusted bookkeeping employees are in reality skimming the books and embezzling money from them. We see articles in the Republic every day about that. In most circumstances, if you had set up proper procedures and policies, this is going to help discourage this type of behavior. I'll give you a hint on one. If you have a bookkeeper that you've hired, when the bank statement comes in each month, who does it come into? Does it come into the bookkeeper so that they can reconcile it? Or does it come into you so you can look at all of the entries before you give it to the bookkeeper? Think about it, folks. I've always believed that if you put too much temptation in front of someone, they will take advantage of that temptation. So you want to, as a business manager and as a business owner, you want to remove as much temptation as you can. Now, the whole gist of what I'm trying to tell you today is to use your P&L to build your business. Not only to build it, but to make it more profitable by being able to have the information at your fingertips of what you really need to be working on. Is it sales? Is it expenses? Is it payroll? Let's take the example of someone that gets a P&L and finds out they spent $15,000 this month on marketing and advertising. Okay, did that translate in the extra business that you want for this month? Or do you think it's going to lag and it'll be in next month? That's a probability too. But anyway, you want to make sure that that 15 grand that you spent has a return on it. And if it doesn't, then you want to remind yourself every time you think you want to spend some money for marketing that you definitely need to get something back for your expenditure. Now, our next class is going to be May 27th. We're probably not going to have 3 that day. We're doing 3 today to try to figure out when most small business people can actually attend the class. And I think we've got our biggest group in this class right now, so this might be a good time. So it'll either be at 9 a.m., noon, or 5 p.m. on our next one on the 27th. You can check our website. There's a place there where we list all of the webinars we're going to have. And we will be discussing using your balance sheet. Now, I'd like to take any questions that you might have over today's thing. There's a question area there on your dashboard. You can just put your question in there. And I don't see any questions yet. I know you're coming. I know that you're busy typing. I still don't see any. Oh, I wish somebody had a question. I want so badly to answer one. Well, Mike, I guess not. I guess we're going to have to say goodnight to these fine folks. Thanks for attending. I know there were a lot of other things that you could have done on a beautiful day like today. But we'll just say goodnight, and I hope you can let everybody else know, if you've got some friends that you think could take advantage of this, that we will be doing it again at 5 o'clock. And they can go to our website and sign in. And also bring your friends next on the 27th to learn all about balance sheets. Thanks so very much for attending, folks. Bye now.